Hello, everyone, and welcome to The Buck Stops Here. I am Catherine Murray. Well, we know that the markets really are quite complex and a lot of different moving pieces and parts to the narrative in the marketplace right now. And I really wanted to continue to provide some veteran views of the market and perhaps where we go from here. For perspective on that, Barry Allen is joining us. He's the CEO of DMAT Capital. Barry, great to be with you today, and I should say a real veteran in the fixed income market. So thanks so much for sharing your perspective.
Sure. Good to see you, Catherine.
Thank you. As our viewers know, I pre-taped this, and you and I are speaking on a day where we just had a blowout U.S. jobs number, far surpassing people's expectations. I want to get your perspective on how you're reading that, and it's almost as though, because the market's rallying, good news is treated as good news in the market. In other words, people don't seem to be fearful that the Fed will raise rates. That's my read.
Yeah, I mean, Catherine, at the beginning of this year, my first commentary I wrote is that I've never been as uncertain or seen as much uncertainty going into a year as this year, and that as we go through the year, that's proving to be accurate, even if it's uncomfortable. But even the employment numbers today. The headline non-farm payrolls was way above expectations, but then the household survey was kind of showing the opposite. And we're showing like most of the wage data is it is moderating somewhat. So it's very, very difficult to to see in the data any definitive trends or indications that they're going to the data trends are going to reverse. So it's difficult. You just got to wait and see how it plays out. But, there's so many data points that have never happened before without a recession that are on now. But definitely employment is the one part of the economy that is dramatically stronger than the rest of the economy. And you would think that shouldn't be, but we're in the aftermath of this pandemic. We've never seen a pandemic before. We don't know what the data is going to expect. We're not expecting small businesses to continue to hire labor as their business deteriorates somewhat, but that's what they're doing.
So a lot to unpack there. I want to first go back, though, Barry, because I've talked about this in the past, but it doesn't get highlighted enough in the media in terms of looking at the non-farm payroll headline number versus what you're talking about and the need to look at the household survey. Why is that more important to you?
Well, I wouldn't say it's necessarily more important, but we do look at it to corroborate the non-farm payroll numbers. And generally over time, they will tell you the same story, but they're not telling you the same story right now. And if there's things that are different this time, it's really in the employment market. But there's a lot of statistical noise in the non-farm payrolls. They have this birth death model that is predicated on starting and failing businesses. And then there's the seasonal adjustments. And all of those have been materially impacted by COVID and the pandemic. And so they're showing trends that seem to be illogical, but the trends are continuing. So, and until those things start to change, I think that the market, will take stronger payrolls as good news because they think the consensus is that the Fed is about to pause. And I agree with that view.
You agree that the Fed is going to pause. Why?
Yeah. Well, I think as you just look at it logically, and they wanted to get the Fed funds rate to 5%. They raised 500 basis points within 1 year, which has never happened in 50 years. And now they want to give it 2 or 3 meetings to see. That seems logical to me, even if the market overreacts to every data point.
Right. Okay, we'll take a quick break. We'll be right back.